So the IPO season is back and everyone, including the Chacha and Tauji, want to buy some IPO. Why? Because they like the logo, they like the business, or they think they'll exit as soon as the market lists.
जोर-जोर से बोल के लोगों को स्कीमें बता दे.
But guys, I know people will continue to do that. The right thing would be that you actually read the draft red herring prospectus, but I know no one will do that either.
हमें तुम्हारे लक्षण बिल्कुल ठीक नहीं लग रहा है, तुमसे ना हो पाएगा.
So we thought, why don't we come up with a simple 5-point guide that you can follow every time you want to invest in an IPO. Before we start with the guide, do something very quickly. Comment right now. Learn App videos are good because this will give us an idea of what you think of what we're doing so far and also push the video to more people. The next time you want to analyze an IPO, open this video, use it as a reference and go through the 5 points step by step. It'll surely make your life easier. So the first thing you need to do is when a company files for an IPO, they publish a document, everything about their company, from the opportunities and the risks. Now this follows a particular format. This document is called the Draft Red Herring Prospectus. And here's how you can download it. First, you go to sebi.gov.in. On this homepage, go to Filings, Public Issue, Draft RHP, that's the Red Herring Prospectus with SEBI. And then you'll get a list of prospectuses of these companies you want to analyze. So the DRHP is a standard document, which means it has the same format no matter what company goes IPO. So whether you're investing a banking company or an insurance company or an FMCG company, they all follow the same format. So let's look at the landing page. This is when you open the document. You'll see the name of the promoters right here and the amount that they want to raise. This will also tell you what's the fresh issue and also what's the offer for sale by existing investors. I got a lot of comments in the Zomato InfoEdge video that InfoEdge is selling its stake in Zomato when it lists, and this is seen as a bad thing. Guys, this is not a bad thing. Existing investors do exit some portion in an IPO event because they want returns as well. They're investors just like you. But if a promoter dilutes a very large portion of his investment, that is definitely a red flag. A small portion is completely fine. Also notice one thing, that the price of the shares offered is not in the document. That is only available 2 days before the actual IPO. Below that, we have the table of contents. So let's identify the 5 points on our checklist. You can simply click on the required heading and the document will go directly there. The first thing is the objects of the offer. This area talks about the utilization of funds, which means that the company that is raising the money, what is it going to use for?
अभी क्या कीजिएगा?
Here I have an example of the Zomato DRHP, and it shows that most of it is going for funding organic growth. Now, generally, when funding is done for growth, that's a good thing. If too much money is used to repay debts, that's generally not seen as a good thing. The second part of the checklist is the About Our Company section. Let me ask you a question. Imagine a stranger walked up to you asking you for money. Would you really give it to him? If you would, you can comment and I'll be contacting you soon, but most of us won't really give the money. The DRHP is the same thing. It explains about the background of the company and its financials. So what are the things you should see in this section? The industry overview, the Our Business section, and the profit, loss, and balance sheet is the most important. Let's understand them one by one. So the industry overview is about the industry the company sits within. So it talks about the market size of the industry. It talks about the potential growth of the industry. At this point, you should try to find holes. Maybe the potential growth is exaggerated here. Key industry parameters specific to the industry, so you know how to judge how growth will happen in the industry. Now, if you take the case of Zomato, you can expect that Zomato would grow in the case of food delivery market itself grows. And the food delivery market is its industry. Then we have the Our Business section. This is pretty self-explanatory. It talks about what the company does, how it operates, the segments it operates in, etc., etc. You should basically read the first para because it has the major business segments and it should tell you about what the company does. So spend some time here as well. Then we'll get to the financial information section, basically the P&L and other financial statements. Here, you'll normally get the last 3 years and quarterly results of the company. You'll see that a few things can't be missed. First is the debt to equity ratio. What is the borrowings? What is the debt? Then is the sales growth in the last 3 years. Ideally, this should be moving up. The operating margins. Are the operating margins increasing or not? Finally, the interest coverage ratio. This is basically the EBITDA divided by interest. It should ideally be more than 2x. And then the ROCE should be at least 15%. If what I just said didn't make any sense, visit this course we have on LearnApp on financial ratios and financial statement analysis. The first lessons are free, so do check them out. But this is something every investor absolutely needs to know. The third part of your checklist is the management. This is obviously the turbine, the fuel that actually pushes the company forward. You should know who the board of directors are, who the management team is, their experience, and their remuneration. I can also see here in the Zomato example that Sanjeev Bikhchandani is here, who's a non-executive director of Zomato. He's also part of a host of other companies like Info Edge that owns Naukri, Jeevan Sati, etc., etc., etc. So this is a good way to know how well experienced the management is and where all they're connected to. The other section over here is the legal and other information. Now, this is important because you don't want a lot of legal cases against this company. So that's one check you should definitely do. You don't want a large case by the government against the company in, say, a large tax matter, which could become a future liability, for example. Then you have the capital structure. I'm sure you're interested to know what investors got in when, at what price, what return they got, etc., etc. And also what particular person was allotted how many shares. This is all revealed in the capital structure segment. The fourth part of the checklist is valuation. Now, I know this is difficult to do. Here's a quick way to know whether it's fairly priced or not. And this is by comparing the PE ratio of all the peer industry versus the IPO. But there's a small problem. Generally, getting the PE ratio is very difficult. A lot of people don't include it in the RHP. So I'll just tell you how you can calculate it. So, ready? I will do this with an example of Dodla Dairy. I hope that's how it's pronounced. Its IPO came out recently, and we can see that the price was declared 2 days before the IPO, and the price of the company was fixed at 428 rupees. So let's see how we can calculate the PE ratio. The first thing we need is the earnings per share. So step one, you calculate the post-issue number of shares. This is the total number of shares after the issue. The way to do that is to calculate the pre-IPO total number of shares. You can get this from the capital structure section. In this case, it's 5.83 crores. Then you add the number of fresh issue shares because new shares were also issued. That is the IPO, right? Which means in this case, it's 11 lakh shares or 0.11 crore shares, which means the total number of shares post-issue is 5.95 share. Now we need to calculate the EPS. All we need to do is take the profit after tax, which is 149.6 crores, divided by the total number of shares, which is 5.95 crores, to give us an EPS of 25.14 per share. The final step to get the PE ratio is to divide the price of the issue, which is 428, divided by 25.14 to give us 17x. 17 is your PE ratio. Now, all you need to do is compare this number to all the other peers. You generally have this information available on the internet. Just Google it. And in this case, we can see that Dodla Dairy is fairly priced because every other dairy company is much, much higher. So hope you can use this to judge valuation next time you're trying to understand the IPO. The last part of your checklist is understanding the risks. Every business has risks, and you need to understand whether you think these risks are likely to happen or not. Basically, you don't want the risk of ruin to happen. Basically, a risk of ruin is when an event happens and takes the business to completely zero. Of course, this is possible. One example is in the GoAir DRHP. There is mentioned that GoAir is unable to pay back its creditors, and the creditors have filed for a legal case. Now, this is a potential risk for GoAir as a company. Even traders have a stop loss. You should also have a mental stop loss on this one single company. So the risks explains the risk of the company, the market forces, and of course the industry. Make sure you understand what the risks are so you as an investor don't get surprised when the industry changes. I hope you found this guide useful, but I know even after a guide, there'll be very specific questions to an IPO, to a company, to a sector. And this is why at LearnApp we have workshops and live classes happening every single weekend. Think of it as your coach, which is going to apply all those concepts you've learned in the courses using live market data to understand, interpret, and analyze what you can do as an investor. So if you're interested to apply your learning to the market now, check out the live classes we have on learnapp.com every single weekend. I think you'll really like them. If not, we have some awesome videos on our YouTube channel right here. Check this one out and check this one out. I'm sure you'll like it. We are working really hard on YouTube to give you great, insightful content. LearnApp's vision is to give education for all, especially in finance. So don't forget to like and subscribe. And if you enjoyed this, give a shout out to Team LearnApp in the comments below. See you in the next video.